Hi everyone, welcome to Wall Street from Main Street podcast. My name is Mo Dawood, and today's guest is a returning guest. He's Peter Grandich. Peter is a former Wall Street money manager, author, and he is the founder of Peter Grandich and Company. Peter, thank you for coming back on.
Always a pleasure. Thank you for having me.
I want to start off this podcast by talking about the stock market. Now, today was another rough day in the stock market. Now, today is September 22nd, the day we're recording this podcast, and the Dow Jones was down 180 points, the S&P was down 24, and the Nasdaq was down at 72. I was looking at the chart for the Dow Jones, and it looked like it formed a base after the big drop it had last month. And look, right now, I don't know if you do technical analysis or chart analysis, but I'm looking at the chart, and the support level right now is at 15,000. So I want to get your opinion on what's going on in the stock market. Do you believe the bubble burst that everybody's been waiting for?
Well, I think we need to first start to say that while it's important that people quote the Dow when they talk about the stock market, to remind ourselves it is just 30 of the thousands of stocks that trade. And sometimes it'd be better if we only quoted the S&P 500 or something like the Russell 2000. But whether you look at any of those indexes right now, there's been, even if you are a very big bull, which I'm not, I'm quite bearish, it would be hard-pressed to state that what we've seen is at least the beginning of a correction. First of all, we went for such a long period of time without a correction, one of the longest periods ever. So even if one was bullish and still saw much higher prices down the road, you would say this is at least refreshing. Obviously, I think it's a lot more than that. I think it's no coincidence that when the market bottomed in March of 2009 was at the same time QE1 was introduced, and the market basically peaked at the end of last year, and that's when QE4 was ended. This has been a Fed-inspired rally. It has not been an economics rally inspired, in my opinion. And as much as people like to say, well, this time it's different, at the end of the day, the stock market still remains, although a lot of participants no longer use it for this reason, but it still remains a place where part ownership of businesses take place on a sale and purchase basis. And eventually most businesses are dependent on a good economy, and the economy at best, despite all the debt that's been created, is barely adequate. So I just don't think there's any real reason to expect much higher equity prices unless the Federal Reserve can somehow create even a more stimulating QE, which I don't think is possible anymore, and that's why in other places around the world where easy money had been, people no longer trust that the easy money story can work. So I think we have tough times ahead.
And I want to correct myself for what I said before. I said the support was 15. Actually, I meant 16,000. And you're right. You can look at the other chart for the other index and see the same thing. If you look at the S&P 500, the support is around 1820. But I agree with you. The bull market and the stock market since 2009 is pretty much induced by the Fed. Without the Fed doing QE1 and the bank bailout, I think the stock market would have probably gone a lot lower in 2009. But right now, they kind of kicked the can down the road and made things worse by pumping money into the stock market, back into real estate, and also blowing up a bubble in the bond market and college tuition as well.
Well, I think what really has happened here, I've long ago, for probably a decade and a half, have coined what I consider most who work on Wall Street members of the Don't Worry, Be Happy crowd. I've always said that you could toss them off the top of the Empire State Building, and all the way down they all say the same thing. Hey, so far so good. They're perpetually bullish. They're perpetually always looking at positives. But I think the reality that was concluded in the most recent days was that the Federal Reserve has painted itself into a corner. It has, in a sense, created an addiction of easy money and believing that is the only way a market can move forward. Even the mere thought of a 0.25 raise in interest rates somehow was considered deadly by some and fearful. And the bottom line is that while the Fed has painted itself in that corner, what's been lost. And I'm still amazed that even the pundits that litter the talking head channels don't speak about how little fiscal policy we've had that is of good quality come out of Washington for almost over a decade, that even before Obama's turn, who only accelerated many of the problems, most of the problems we have not seen good laws passed that small to mid-sized businesses can look at and say, yeah, you know what, those are positive fiscal things that are happening to make it better for me or this group to be business owners in America. It's gotten extremely difficult. My primary business is with small to mid-sized business owners throughout the whole United States, continental United States. And in every sector, in every area, when you speak to them, the thing they talk about most is how difficult, if not impossible, it now is to run their business due to regulation, concerns about how to treat employees and health benefits and health costs and all. And they're afraid to invest whatever money they still have because they're not certain what tomorrow is going to bring. And that's the real untold story about these last great run in the stock market. While it's been very good, extremely good for the top part of the pyramid, the bulk of the pyramid has not seen that. And part of the reasons we've seen in this early Republican run for presidency that so-called non-politicians being the leaders supposedly by the people is because people don't trust and don't have any belief that the general politicians, whatever side of the aisle they're on, are going to be able to fix the enormous problems that are out there.
And the two major players in the "Don't Worry, Be Happy" crowd is Jamie Dimon and the CEO for Goldman Sachs. Because this past year, they both became billionaires. I'm sure they wrote thank you note to Ben Bernanke and Janet Yellen for that.
Well, there has been a clear influence from Wall Street on government policy and for a lesser extent, Fed policy. And when you think about it, it was just 7 years ago when all of them had to come with their hands opened to be saved by the government and avoid a total financial meltdown worldwide, that in such a short period of time that they can make so much money again. And really, in a sense, we've not corrected any of the procedures that should have prevented things that happened in the last crisis from happening again. It may not happen exactly as the last time, but it'll be many of the same participants. They might have changed the name on the door, but their acts are still the same. And that's the other thing that's changed in the 31 years that I've been around Wall Street. When I entered the brokerage business in 1984, almost 85% of the trading then, which was almost exclusively on the New York Stock Exchange, was done by retail. Now it's down to like 12% is considered retail. And, of course, the New York Stock Exchange has really come a museum because while we might see that on a television channel, people trading, the vast bulk of the trading in markets now comes off the New York Stock Exchange. So I just think there's great troubles ahead. I think the stock market has been heavily influenced by artificial means in the sense that it isn't riding up because people want to own companies because they're going to do better in a better economy, but by all the massive liquidity and cheap money that the Fed has put in, and no one recognizes there's a price to pay for that. We've increased just the Fed balance sheet by over $5 trillion. Some estimates we've increased long-term debt as much as $15 to $20 trillion, and we still have not dealt with the much even bigger problem, and that's the unfunded liabilities that the United States has, which many estimate somewhere between 50 and 100 trillion and growing. So all these things, plus what's happening around the world, and I don't mean to keep talking on, but I think that's critical because we're a global economy now. If you remember, it wasn't just a few years ago when one of the most popular things that came out of the Goldman Sachs's and the other big firms was you got to own the BRIC countries. You got to own Brazil, you got to own Russia, you got to own India, and you got to own China. Well, the Brazilian currency just hit an all-time low today. The Brazilian market, the Russian market, the Chinese market, I mean, these have all taken major hits. And to its credit, if you want to call that, the United States has been somewhat insulated from it, but it is no longer the economic engine that pulls the world around. So with weakness in those key countries, it's transpiring and spilling over into the U.S., and that's why we're starting to see a significant slowdown in the U.S. economy as well.
And all that you just mentioned right now is the unintended consequences of the currency war that's been going on ever since the financial crisis started. Now, do you think the Federal Reserve lost all its credibility after claiming the economy is recovering but refusing to raise interest rates? I mean, Janet Yellen has said that 13 out of the 17 Feds still want to raise interest rates in 2015.
I think what they clearly lost is a sense of belief that they were in control. I think even the most ardent bulls, or the ones that spend most of their time in the financial media peddling their wares, I think even they know that they have not taken control, that they have painted themselves into a corner, and it's almost now any move that they make now, they look no longer ahead of the curve but behind the curve. I think what also has happened here is I think the Federal Reserve has gone beyond, if you want to call it, its mandate. There's no question that what has happened around the world influenced that decision to back off on pulling on interest rates here. When 20 or 30 years ago that would not be a major concern. But we are a global economy now. It's not the same as it was 30 years ago. And let's face facts. There's only so much you can do by lowering interest rates. We've seen it fail in Japan for several decades, and I don't know of anywhere in history, and this is the most amazing thing, and of course I don't expect the general financial media to put the feet to the fire of the don't worry, be happy crowd, but there is no time in history that I know of, and I think I know history fairly well, where large debt increases solved debt problems. Always inevitably what happens when there became too much debt, there was a need to cleanse it, which would involve defaulting and austerity and so forth. And it's clear and evident that the moment most countries face that, we saw that in Greece earlier this year, we've seen that around the world, people don't want to take the hard task. And that's why those of us back in 2008 said that if you let the financial crisis mature on its own, we may go through a few years of quite difficulties, but we would be better off in the long run. And now I just think when the next crisis comes, it will be even more severe than the one back in 2008.
Oh, yeah, I definitely agree. We're in unstable times right now and going ahead. And it seems like on average, we seem to go to a financial crisis. About every 10 years, we had the dot-com bubble. And then about 8 years later, we had the financial crisis and housing bubble. Now it seems like we're due for another one pretty soon. And ever since the Federal Reserve was introduced in 1913, I believe, we've had more and more boom and bust. And it's no coincidence that it happened when the Federal Reserve was created.
Well, I also think, and it's something I've spoken about for a couple years now, and that is that we are getting the combination of the worst political, social, and economic period coming together. And one, economically, we just don't, despite trillions of dollars created, we have not had a strong economy. I mean, at least in the last year or so, the bulls stopped talking about, oh, we're going to see the economic recovery. We're going to see the economic recovery. It's never really recovered. Did it come off the bottom? Yeah, no question about it. But given all the money that was created, to still only have 2% growth, given how much more debt we've incurred, not only on the federal but on the state level and consumer level, it just wasn't prudent to spend all that money. But at the same time, I think part of what's happened in this early political process is really, call it whatever for Trump, but it's really people, maybe they would call the silent majority back in the 80s, who are just, in a sense, voicing disgust about how far we moved away from how we were as a government just 30 or 40 years ago. Obviously, we've moved to the left in that regard, and entitlements and socialism and all the things that seemingly have not only come to America's shores but have gripped Europe. There is a voice of a group of people now saying that, this political correctness and all this giving away everything, including letting people in droves and illegal alien and all of this, there's a cry from a certain sector that has not really spoken up in the last couple of decades. So that's a political crisis because the left is still entrenched in the media, and you just had to watch these Emmy Awards to see how Hollywood just tore apart the Republicans and Trump and anybody that spoke in the manner that he did. And at the same time, we have these social issues now, not only the immigration, but the entitlement. Here in the state of New Jersey, we discovered that an unwed mother of 2 children can earn up to $47,000 in entitlements without ever going to work. Now, if I can earn $47,000 and not work, and only earn 25 or 30 if I work full time, I think I'm going to choose the not work phase. And that's just a small issue that I bring up to show the social issues that we're facing here. We're facing a demographic issue. We're getting very old. I'm moving into that sector. I spent a lot of money over the years. I kind of want the things that my parents had and all of great medical care and Social Security and all that. And younger people going, hey, listen, Mr. Grandich, I don't think when you're 75 we should spend $400,000 for you to get a heart or kidney transplant. I'm working my butt off here as a 29-year-old, and I don't want to pay all these taxes. And I believe there's a war of classes in a sense coming as well. At the same time, when the economy is not going to be doing well, so I see the worst of all worlds in the 3 areas: social, political, and economic. And I think they impact each other, and that's why I've taken this live chicken versus a dead duck attitude and basically have built the foxhole and plan on remaining there for quite some time.
And you're right, there is a war going on with classes. If you look out the debate going on with minimum wage, they're trying to raise it to help out the lower class, but I think it's going to make things worse for the lower class, and they're going to end up jobless because it's going to replace these people with machines and robotics. And then also the debate on income inequality. A lot of people that want more taxes on the 1%, and even Donald Trump wants that as well. But if what's interesting is, just to be part of the 1%, all you have to earn is $350,000. It's not like you have to earn millions of dollars to be part of the 1%. I don't think a lot of people realize that.
Well, but that brings up a good point, and that is that what really was the backbone of America for its first, certainly since the Industrial Revolution through, say, the 1980s, was what we called the middle class. It was the largest percentage of people. It was really the backbone, and it has shrunk a lot, and some made it to the top, but more has fallen to the bottom end of that rung. And it's when if you go to where you either have very wealthy or very people struggling and not a lot of people in the middle, you lose kind of like a buffer zone. And eventually the have-nots see that few that haves and want it, and do a lot to take it. And history is full of that lessons, and I don't expect it to be any different. We see some of that already now of what's happened in Europe, in certain parts of Europe, and even in Asia and so forth. And we haven't even begun to talk about some of the geopolitical issues. I mean, I don't think people realize what is happening in the Middle East has unbelievable ramifications to come, whether you look at just the immigrant standpoint of the unsettledness of tens of millions of people having to leave and go elsewhere in the world, or the fact of once the Iranians clearly are on their way to a nuclear weapon, I don't see how other places like Saudi Arabia don't want to sit around without having one. And, this is a president, in my opinion, this is my opinion, I've had it since day one and took a lot of abuse in the early days. I don't really get abused anymore. But this is a president that's been unqualified to lead, and because of that, I think we have a whole inherited issues across the board from abroad to right here at home that are going to come back to bite us for what we haven't done or what we've done wrong in these last 7 to 8 years. So again, I like to paint a prettier picture. I don't sell gold. I don't sell dry food. I don't sell ammo, and I don't sell cabins in West Virginia. So it's not that I want this to happen. It would be much better to envision things going great, and there's reason to think the Dow can go to 30,000 and so forth. It would be better for me business-wise. But I just see that as an impossibility given all the things you and I just discussed.
Yeah, and I echo what Ron Paul said about what's going on in the Middle East. This is a result of very bad foreign policies that was enforced by a lot of the neocons, including Obama and Bush and everybody before them. And all this that's happening in the Middle East is unintended consequences, which is completely unstable region in Iraq, Syria, even Saudi Arabia is becoming unstable in Egypt. So it just...
Here's my issue, and this is, I don't get too much into politics, but I tell you this much. We've only had really one ally in the Middle East. Thick and thin, to whatever you want, however you want to look at it, Israel's been our one ally. I mean, that's, if you said if there's one country you'll never have to worry about, you're going to wake up in the morning and want to attack the United States out of the Middle East, it's Israel. Well, how have we treated Israel in all this? What has transpired in this policy and so forth and so on? Certainly, they feel more in danger now than any other period of their time frame. And my personal opinion is I can't imagine that they can live in peace given what is now being allowed and about to pass once we pass this so-called treaty that it ended up being. It's just a time bomb, and it's very understandable. And I think they wait to see the change in presidency and hope that there's a more favorable president that looks upon them. And I can't see them living with a nuclear-powered Iran. I mean, look, again, they're not discussed on TV. It's sound bites. It's politically incorrect. But realistically, what we're now agreed to with Iran, we agreed with North Korea over the last 25 years. And what did they do? They never followed anything they were supposed to. We were supposed to have all these safeguards, and this was supposed to happen, and this. Well, they kicked those people out. And then whenever they need money, they threaten and they point to things, and we send them a few $1 billion to keep them quiet. And, Iran has far more political ambitions and an ideology that believes in a God that wants to see people killed. So it's just really what I'm most sad about is my 23-year-old. I might sneak through this. I'm going to be 60. Maybe all the hell doesn't break out for another 10 or 15 years, and I pass away before then. But I think our children and our children's children are inheriting a much more difficult America to live in than anything before its history.
And I want to shift gears here and talk about something that one of the services that your firm offers is financial advice to athletes. Now, there's a lot of awareness that's been coming along the past 5 years about the financial management of these athletes, and a lot of these popular athletes go broke or filing for bankruptcy, like Michael Vick, Warren Sapp, and etc. Now, I'm looking at the interesting statistic by Sports Illustrated that they did in 2009 that 80% of NFL players go broke after they retire, and then within 5 years of retirement, 60% of NBA players are broke. So I wanted to ask you, what's the biggest mistake athletes make when it comes to financial management?
Well, I don't think your show is long enough to discuss it, but I'll try to give it in a short form. First of all, those statistics you speak about are somewhat misleading only because it is true through the 1990s, while they made more money than the average public was making then, they didn't make the crazy money. And a lot now, I call it crazy money. I mean, I love sports, and like you said, we have clients for the professional sports, and probably the sum total of their earnings is $1 billion or more. And to tell you the truth, I wouldn't pay them as a business that. But America wants and loves sports, and they get paid because the people that own the teams they play for can pay them because they themselves are making so much money. But the bottom line is that there's been a change in how professional athletes handle their money. It is only starting to take root now. And if you don't mind, I'll digress a little and point it out because I don't normally get a chance to speak about this. The Jerry Maguire movie, it was very good in this, and that is that what was once a lot of mom-and-pop agents and agencies has now become a big business of giant firms. And basically, whether it's baseball, football, hockey, or basketball, the top 2, 3, or maybe 4-round draft choices end up dealing with an agent or agency that basically now provides more than just their contracts. They'll handle their PR, they'll handle their after-the-game marketing, the public relations, their legal, their financial, just about everything that they need to do. And with that, many of the professional sports, led by the NFL, has taken time and money to set up programs to ensure that there's not a lot of shysters can get to these guys like they used to. For instance, the NFL has a certification program. Really all it is a program that basically encourages its players not to deal with anybody that hasn't been certified by the NFL, and the only way you can get certified is you have to have some sort of licensed through some regulatory agency, whether you're a Series 7 broker or a registered investment advisor, or else you can't get the certification. So there are training programs now. Both the NFL runs it as well as individual teams. 2 of my board members, David Tyree, obviously everybody remembers him from one of the greatest 15 minutes of fame in sports, the great catch in Super Bowl a few years ago. He's now head of player development for the Giants. Another board member of mine, a 15-year NFL player, David Zott, he's head of player development for the Jets. Their jobs exclusively are to prepare the current players for life after football. And there's all sorts of programs that go on and on. So the guys you still hear about that played 10 and 15 years ago and 20 and lost it, there was nothing like that out there for them. It's not to say that none of the guys now don't get in trouble, but a lot of their troubles are created by their own faults and families. I can't tell you how many young guys just had a client released today by the Giants, and I can't tell you before he signed, he probably didn't see his second and third cousins for his lifetime, or maybe once in the last 20 years, and as soon as he became a Giant, they all showed up and they all had investment ideas for him or businesses they should be involved in. The other thing I point out to you that a lot of people forget is these are really young men at best, and still big boys, little boys, I say, in big men's bodies. Their maturity hasn't caught up to their size or their abilities to how they play sports, and it's very hard. And quite frankly, in the African American community, many times it's the first time a family member has seen great wealth, and there's a desire by the young boys to pay back family members and all for their help, but they also listen to crazy ideas and schemes, and for whatever reason, they all want to buy 2 things that don't normally work out: restaurants and bars and fancy cars. And but there's a lot more for them now to learn about and be educated. So yeah, every story you hear is bad, but I can assure you, out of the 53 players, I would say 40 to 45 are getting counseling and advice that wasn't given to the same type of player 15 or 20 years ago.
And a lot of them don't even have a bank account until they become pros, so they never manage a bank account.
Well, yeah, and you know, like I give you an example. I can't ever tell you names, but a few years ago, 2 young guys came to a certain team. They got a signing bonus of somewhere in the area between $600,000 and $1.3 million. I think one was that and the other was that. And they had a salary that year. And of course, what people don't know is, you know, they get 1099, and so they get their whole salary. And they were a 4th or 5th round or 6th round draft pick, so they had an agent or an agency that basically handled their contract, but didn't do all that thorough stuff that I told you that the bigger draft choices guys normally get. And they spent the money, and then they got notification that that they owed $600,000 in taxes, and they couldn't believe it. They said, "What do you mean the taxes weren't taken out?" And Thankfully, both of them were rescued by the team that they play for that set up a qualified loan to them over their income from the next 3 years, and they're still playing, so they were able to pay it back. But there is more of an education process happening now. I have to tell you that the NFL is clearly the leader in that. Every team has a head of player development like Tyree and Zott. The NFL's now started a mentoring program. Another board member of mine, Keith Elias, now who works directly for the NFL right under Troy Vincent, his job is to go out and mentor current and past players, and that includes a financial mentoring as well. So I think you'll see less and less. There'll always be those stories, but remember, there's 53 players on any NFL team, and you times it by the 20 teams. So you hear one story, but there's a lot of stories where that's not happening, and they're handling themselves quite well. So it'll always be something like that, but I think it doesn't matter. The same thing happens to guys that work on Wall Street. I mean, you should never hear a story about a financial guy getting wiped out because he's supposed to know about finances, but they do. So unfortunately, the sports and entertainment is big news, and anytime something like that happens to one of them, there's 22 of these papers that sit at the end of the grocery aisle and 5 of these shows at night that like to report those things.
And there's a lot of athletes out there that I'm surprised that they are filed for bankruptcy. One of them is Mark Brunell, former quarterback for the Jaguars and Redskins. He filed for bankruptcy, and I heard he had a lot of real estate.
Yeah, well,
and investment go bust.
Here's what's hard for the average person. So an average person just makes a simple income, goes into his job, his wife goes work, has 2 kids, may live small home or something. They never get to taste the millions of dollars. So it's incomprehensible to them that, man, if I had that $5 million, I would have never blown it. In some cases, that's true, but a lot of people on small to mid-sized incomes overspend and have too much stuff. It switches back to my biggest pet peeve in America, and I've talked to you about this before, and I've written about it exclusively, and it's in my book, and my biggest pet peeve is public storage. I mean, our parents never needed public storage. Why? Because they didn't have all this stuff. But yet our homes are 5 times bigger than our parents and grandparents were, and yet we have to pay people down the street to store stuff for us. Well, that's the general public in large that's doing that. They didn't have to make $1 million to have too much stuff. The reason you hear it when it's a Mark Brunell and all, like I said, it's the exception to the rule. I can tell you that especially in the last 5 years, I have watched 1,000% improvement on how professional athletes now, by and large, are going about handling money and all, and I think it will become lesser of a story than it's been for the last couple of decades.
Well, that's good to hear, because my next question is if you've seen any improvement in recent years, but you just answered that question that you have, so that's good to hear. So hopefully we'll see less and less of those kind of stories out there. But Peter, thank you for coming on for Wall Street from Main Street podcast. If people want to find out more about your firm and your work, where can they go?
Sure. The best is to go to the parent company website. That's Peter Grandich, Peter Grandich, one word, petergrandich.com. And the 3 companies are listed there, and everything is for free. They can sign up for the blog and get an email alert each time we write something on our blogs.
All right, Peter, well, thank you.